Hi, welcome to my class of Behavioral Finance and FinTech. I'm Andy Kim, the Professor of Finance at SKKU Global Business Administration, and perhaps this is the most fun class of all time, right? FinTech as well as Behavioral Finance, fun stuff mixed up together. Why are they mixing up? We're going to see that why is pretty soon. Prerequisite of this class, well, financial management. Yes, if you have not taken this course, right, then please drop it right now. Bye-bye, right? But if not, you can stay here and then enjoy the rest of the class. Okay, the roadmap. Well, today I'm going to talk about the introduction of this class, about, of course, introduction about me and the course. Why FinTech plus behavioral finance? There is some legitimate reason why. And I'm going to talk about the syllabus, and then we'll start the discussion, okay, for the first week. We're going to have some refreshers about efficient market hypothesis. You can barely remember that because this is just fresh out of your summer break or whatever break, right? So I have to brush up your memories. And then not just to brush up your memories, but you will realize there is so much lying behind this efficient market hypothesis, so much so that you will realize, oh, that is too strict an assumption. What if those assumptions breaks down? And that is where behavioral finance is helpful. And those behavioral finance, how were we able to tackle those issues? Thanks to big data, which was also applied in FinTech. You're going to see why these two subjects has to be mixed together. Okay. Welcome to my class again. You see behavioral finance. This is a picture that my student, Yerim Lee, who is now working at Samsung Electronics, graciously combined the picture of Harry Potter and my face over here, right? This is such a fun class, so I hope you enjoy it, right? So who am I? Well, that's Andy Kim, me, or Young-han Kim in Korean language, right? So I've been teaching here for about 6 years, by the way. Don't get confused with same named professor in economics department, Kim Young-han 교수님, 10 years senior to me, even though he looks very young, but he's a great scholar in international trade. So international economics, you're going to enjoy his class in economics department or global economics. But me, I'm Young-han Kim, same spelling in Korean language, but because of the same spelling, so many people send email to the wrong person. I often get his email in my account, and he often get my emails to his account. So don't get confused, don't get mixed up, okay? I am teaching finance, also international finance, but I'm more from the perspective of business guys and hedge fund managers kind of perspective, whereas his perspective will be more like a macroeconomic, like a social planner's perspective, right? So you see my contact information over there, yes, and more about me over here. I am the program chair of Global Business Administration, the flagship program of Seonggyungan University. Asia's oldest university, by the way. This Seonggyungan was established in 1398, more than 600 years, right? So, what is the oldest university in Asia? This is it. Now, GBA is the proud flagship program, so I'm honored to be the program chair, by the way. Since last year, this is 2 years term. Anyway, professor of finance at SKKU since 2015. And then before that, I was working at NTU, Nanyang Technological University of Singapore, since 2009. And then before that, I got my PhD at the University of Minnesota. But the time I was in the job market to get a professorship, it was a horrible global financial crisis, so much so that not only the banks were shut down, but also the university was shutting down. They said, almost half of them said, we are not going to hire anybody. Everybody was freaked out. Okay, terrible job market. But I sent out 150 resumes all around the world, and then almost half of them said no. But despite, I was very fortunate to get job offers from such places as the University of Cambridge in Britain, like Cambridge, Oxford, right? By the time I was about to go there, Nanyang Technological University said, no, hold on, wait, we're going to give you 3 times the salary, right? So I was like, well, thank you, because I have my family to feed, right? My 2 daughters and my wife, so why don't I go to Singapore, right? That was one of the best choices I've ever made in my whole life, because Singapore, Asian people, for my daughters, right? It was such a great place because we never felt like we were a minority at all. Plus, K-pop was such a big thing, so much so that every students around my daughters, right, their friends were gathering around and then asking them to teach some Korean language or the kasa or like lyrics of the K-pop songs like Gangnam Style or whatever. So we had so much fun over there in Nanyang and then Singapore. Very enjoyable. Plus, they had so much of an investment, right, for academic development. So I enjoyed great opportunities to develop my research. Previously in Minnesota, I was more of a neoclassical finance guy, but in Singapore, as I studied more and more about it, I realized behavioral finance is much more fun and closer to reality. And then I became more famous thanks to my research paper about Gangnam Style. You're going to see that, and the bubble related to this. So that turned my life completely. So that was a great experience over there. Before getting my PhD in Minnesota, I also got my MBA at the same school, Carson School of Management. Such a great institution. And we had great alumni over there in the Midwest and then all around the US. Before that, I worked for Bank of America Seoul branch as a corporate credit analyst. My job was to analyze Samsung Electronics and CJ and LG Electronics and all these industrial big guys in Korea, their credit ratings and all these kind of things. Internal credit rating was the likelihood that they're going to go bankrupt, all these kind of things. We studied that. And also treated our corporate clients, like treating the CFOs of those big corporations, and then the relationship making. My boss was a relationship manager and I was assistant to follow those. And then anyway, before that, I graduated from Yonsei University. I was belonging to a marketing group, which is called MARP, a marketing all-round players. And that group of people still is there, right? 600 alumni in that that club. That was about marketing strategy study group. You see that I'm more into that market. Well, I was more into that marketing creativity. And believe me, more than half of us ended up in global investment banking, because global investment banking, they need marketing creativity. The message I always tell to my students is that don't believe that you will be stuck into one specific field in whatever you're interested in your undergraduate period. You never know what you're going to get in your life. So plus, if you are interested in marketing, that's even better for finance, because finance is not just about black and white, right and wrong, number and number. No, it is more about the marketing creativity, how to serve your clients better in more creative ways, right? Not just that, how can you foresee your clients will develop in their own businesses? Okay, it's not just about the money. It's all about how they pioneer into new market in creative ways. To assess that, you have to have that creativity as well, right? So that's why my friends over there are now working at the private equity companies like Stig, and then became consultants at McKinsey or worked at Goldman Sachs like that. Okay, so I always tell my students like this in global business administration, right? You never know what you're gonna get. Get ready for that. Number two, when I was in the job market at undergraduate, that was 1999 and 98 period. That was right after the financial crisis of East Asia. I had such a hard time getting jobs because that was the first time ever Korea suffered such a huge crisis. Before that, my predecessors or 선배님들 had such an easy time getting jobs. No study, still getting jobs at Samsung Electronics. Okay, no problem. Drinking like crazy, party like crazy. But we partied like crazy together, but no job. Okay? Terrible experience, such a depressing experience. So in that sense, I sympathize you guys. Right now, you guys are suffering from huge crisis called Corona-19 virus. And then it's extremely difficult to get a job. But I say to my students, hold your head up high, right? Hold your head up high. You will be there. And send out your resume to hundreds of different places. At that time in 1999, I sent about 75 resumes to different companies, right? So many ding letters, so much depressing experience, but still got jobs, right? There will be positions for you. You just need one position, okay? Keep trying, keep trying, keep trying. Just keep swimming, just keep swimming. You'll be there, okay? So at least psychologically, I can boost you up, okay, and then comfort you. I got a job offer from L'Oreal marketing position, and then position from Samsung life insurance in their finance department, and then finally got a position at the Bank of America. So I wanted to learn from the best institution in the world. So that's why I chose Bank of America at that time. That was one of the best choices I've ever made, I think, as well. And then Google site, you can check out my Google site every now and then, and you will see my messages, personal messages. I hope that helps you. Okay. So you see my development as of my career. Yes, improving better and better and better. Right. So that's what I like, I appreciate. And the teaching areas, yes, behavioral finance is my research area and teaching area. This is most fun stuff. And data science and finance and hedge fund, this is a new course that I'm going to teach this semester. But data science will be related to behavioral finance, those big data stuff that we use. Until last year, I only had one course of behavioral finance and FinTech. We had some coding part of it. That turned out to be heavy, so that I singled out those coding part and then place it now into data science part over there. So behavioral finance this semester, we are not going to have codings, right? You're going to have more of a fintech, so that you will be studying those fintech on your own, do some case studies on your own, go study about new fintech companies and develop your own ideas over there. That's the difference from previous years. Okay? If you like coding parts, our coding, by the way, you can take data science and finance, which is current topics in finance, right? You can take it simultaneously, so that you will enjoy it both ways. And then in spring semester, I teach intermediate corporate finance, which is about valuation largely, and international finance, which is luckily I got picked up by Arizona State University's Atif Ikram professor. And then he found out, oh yeah, you're teaching international finance using 은철수 교수님's textbook and then Un and Resnick. Why don't I link that textbook chapter by chapter with your lecture by lecture? Okay, so go ahead and then enjoy those class for free for all the students around the world. So I said, thank you. Yes, that's great. You can always click this simplytaught.com and go there and then find out Un and Resnick's textbook and then find my lecture specific to that chapter. So I hope you enjoy that part as well. And then CFA Research Challenge has been my extracurricular kind of helping my students. Why is that the case? Because this is a great event that connects those guys in the industry, hedge fund or asset management or investment banks, just you name it, right? Those CFA experts are willing to come and talk to you guys, your undergraduate and MBA students in the universities, great universities. So you guys, undergraduate university guys, present your valuation results, and those guys from the industry come and talk to you. That is a great chance to network and then develop your thoughts and methodologies, right? Learn from the best guys in the world. So that's why I'm helping my students to go there, get to know the people. Now, my research area, I told you this is about behavioral finance. I told you about Gangnam Style. Recently, I got more interested into the biological traits of the CEO that we can capture from their big data sources like face picture or voice files, right? Awfully fun subject, right? I love this part. This is driving me, waking me up at night. So this is a lot of fun stuff going on there. Their risk preferences coming from their biological traits drives the company to be more risky because the head guy over there has such an important influence over the organization. And then so my study, it's about the impact of psychological and biological traits of the CEOs on firm risk, M&A, and then corporate financial decisions. How to capture traits? Well, through the big data, yes. Overconfidence, facial masculinity, narcissism, self-attribution bias, all these kind of things. Textual analysis to capture those biases. I like that subject very much. If you want to measure your facial masculinity using your face pictures, go to this website and then upload your pictures, and then you'll get some numbers out of there. And then, why do I mix behavioral finance with fintech? 네가 왜 거기서 나와? Why do I see you over there? Well, there's a reason why you will see that. Every now and then, my students say, fintech and AI, oh my God, this is the age of AI, rise of the machine. It seems like they're going to kill me. They're going to eat up my profession. So scared. Even though I'm business major, it seems like I'm wasting my time over here. Don't I need to major in AI rather than the business or economics? But wait. Hold on. Okay, hold on. Here is a case that I want to tell you today, right, as an orientation. The case of AI team in S Bank, I would say. S does not stand for whatever you imagine in your nasty dreams. No. One of the biggest banks in Korea, okay, Shinhan Bank, right? Commercial bank. I don't say it out loud over here because they're gonna, be pissed off. But so let's call it S Bank, right? They advertised in the news media like this. We established an AI team and spun it off as a subsidiary, as a way to pioneer fintech, the fourth industrial revolution. It's like AlphaGo of finance. Do you know AlphaGo, by the way? Yes, that Google machine that beat human Go player, 바둑 player in Korean terminology. What was his name? 이세돌, right? 세돌이, right? 이세돌. Such a shock to the whole world, especially in Korea. But that was in 2016. Ever since, this AI has been freaking out the people in Korea so much, so that whatever you say AI, people will say, "Oh my God, he is replacing my job," kind of things, right? Then this bank, S Bank, seemed like pioneering all these things to preempt the other guys, right? Let's see what they say. We are already developing it into version 2.0. Well, With the launch of S-Bank's AI team in 2019, S Financial Group became the first financial holding company in Korea to introduce a company with specialized artificial intelligence capabilities. We seek to expand its business through a variety of AI-powered investment consulting services. So why don't you come and join us and be our clients where our AI will serve you? Well, and they say our AI found out that the inflation rate of Zimbabwe has significant predictive power about S&P 500 index return. We don't know why, but that's what AI is about. You get unexpected predictor from nowhere. It's completely out of the conventional economic theory or human knowledge. The AI found out something new, and get ready. So if I show this thing to my undergraduate students, their typical response is like this: "Wow, so sexy! I must learn AI. Maybe I should dump my knowledge about business or economics, all those bullshits. Oh, maybe I should learn coding first." My message: there are so many snake oil salesmen in the world. There have been so many snake oil salesmen. They keep on coming in the name of all new fashion engineering, new sexy stuff. This time AI. Last time .com. Okay, or last time maybe the financial engineering with those real estate, those CDO kind of things, right? Now, what am I telling you, right? This is largely the finding, or this is the witness by Dr. Jae-hoon Lee, 이재훈 박사님 of Deep Search, right? One of those robo-analyst company, and you're gonna see him in our guest speech in this semester. He said like this: you know why those S Group's AI team was, finding out the Zimbabwe stuff, right? Here is Zimbabwe's inflation rate, okay, historical inflation rate. They suffered from huge hyperinflation in 2008, okay? And they were predicting S&P 500 return 1 year later, T-1 and T, right? So lead lag effect, right? As it turned out, coincidentally, just by pure luck, Zimbabwe had such a huge high inflation rate jumping up like this. Right afterwards, S&P 500 hit the bottom and then jumped up in 2009, right? So mechanically, you would find out positive correlation, strong correlation, right? And lo and behold, Zimbabwe deserted their own currency because of this hyperinflation and dollarized themselves, right? You will find some correlation, whatever. And you are advertising it in the news media. And moreover, the readers are like, oh, such a huge and sexy AI. I should desert my economics or whatever, and then maybe I should learn coding first. Swimming into the coding, jumping into the coding. No, come on. We are trying to develop another AI that explains why Zimbabwe's inflation is important. A kind of interpreter machine. That's what this S-Bank is saying. Good luck. To judge, okay, whether a pattern you found is in big data would repeat in the future or not, you need rock solid understanding of the data generating process, i.e., you need guiding theories that explain the fundamental relations among the variables that you are interested in. Haste makes waste. Hold on, man. AI, so sexy AI. No way. Come on. Back to basics. That's economics or psychology that explains the pattern that could repeat itself. Otherwise, those patterns that is outside the theory, throw it away. Machine learning, AI, they can find all this kind of garbages. Okay? Only after having people with solid theoretical understanding, machine learning starts to be effective and meaningful in that specific application. Last month, coincidentally, another friend of mine happened to visit that S group with AI team to learn about how they work. That Zimbabwe team, by the way. Math PhDs and computer science PhDs are taking the leadership role, core position there, and the business group, business majors and econ majors, master's degree or undergraduates, like you guys, right, are assisting them around, 보좌진, right, serving them. They seem to find some correlations and patterns, but largely they seem to like overfitting and pure data mining. Okay? FinTech is about banking, which is the relation between human and money. Essentially, this would be explained by either of the two, economics or psychology. Economics means incentive. Psychology means something intrinsic, the instinct. Okay? Neoclassical economics plus behavioral finance. You need solid understanding of these two. These have to be your skeleton. And then machine learning should be your muscle. Okay? And AI, right? 이재훈 박사님, Dr. 이재훈 says, largely, whenever they say AI, it's more like a snake oil sales. They have to be more conservative by saying machine learning, ML. There are so many limitations, so much limitations, so that you have to be polite and conservative in claiming what you are doing. Okay? No AI. ML. Oh, ML does not stand for Merrill Lynch this time. Only then you can use AI in a meaningful way. Okay? If you rush to blindly learn about AI, you will end up with a boneless monster that you don't even know if it is an octopus or amoeba. You're choked. Like this. Only retail investor and then students would be sacrificed. So here's my message, right? Skeleton has to be neoclassical economics plus behavioral finance, the psychology. Econ plus psych. Back to that SAI team. Well, it is impossible to find an undergraduate or business economics major that studied both very well. Because why? Well, they may have been trained well in neoclassical economics, but largely Korean academia have been ignoring behavioral finance so long a time. All they know about, the professors, right? Their prior is so much hung up onto that neoclassical economics because they were trained in that way tens of years ago while they were studying in PhD in the United States or UK or whatever. Behavioral finance took off only recent 20 years or 10 years, okay? And largely those PhD programs are very conservative, not to teach something brand new, but hold on to what is already there, some dogmatic field called neoclassical finance, right? The innovation was not learned that much. So that's why academia is slow. Consequently, those undergraduates are not trained in behavioral finance ways. Those guys in the industry right now, they are those guys, right? So that's why impossible to imagine that. Plus, math and engineering PhDs in that core position, good luck. And then lack of communication between these two groups is even worse because math PhDs, well, they went to math PhDs because perhaps they are not good at communication. Okay? And then they throw out maybe some strange numbers or solid mathematical formulas that nobody understands. You're in trouble. That's your trouble. I'm math genius, and not my responsibility. And those guys who are receiving it as an assistant, they have a hard time understanding. That's why Zimbabwe inflation rate is such a huge thing over there, and then they are proudly announcing it to the news media. Come on! And then, given that this lack of communication and the troublesome going on, you see that trouble going on, right, already. What do top managements think? What would you think if you were the top managers? Well, they would say, well, I don't know. It's a short term. 3 years later, I'm gonna be, out of the position. So who cares? But during my short-term positions, just make money out of it. So let's use this AI stuff. Sounds sexy. So let's use it as our marketing tool. At least we can draw some attention from the general public. I told you, even the finance major guys in our undergraduate program, they are like, oh, so sexy. The rest of the people, easy to draw attention. AlphaGo of finance over here. Come on. The trouble is, if you manage your banks like this, you may be able to ride onto the wave in the short run, but this kind of bubble will burst in the end. Anyway, there will be a crash. Now we are seeing a lot of bubbles associated with AI. Eventually, it will burst. At that point, who will suffer? Who will suffer? Retail investors, because they don't know. And then the students, they are naive. So that's why. Once the fashion is gone, the bubble will crash. We have to get aware, right? Don't we experience this kind of snake oil selling enough? Why are we repeating it time and time again? Back to basics. That's what I'm saying. Fraudulent accounting in FinTech is another example, not just in Korea, but in Germany. Wirecard, a 19 euro fraud, 19 billion euro fraud, by the way. Okay, billions, right? Cosmetic accounting was found in this FinTech company called Wirecard. And then it was established in 1999, and it was a payment company, and major customers were the users of internet porn site and gambling site. Oops, beep, right? So beware. There are a lot of snake oil salesmen. Okay, don't get freaked out. Okay, but the thing is, not all the technologies that is used in those FinTech or AI is bullshit, but they have some legitimate reason why they are there and hot in fashion. There's some of them, significant number of those technologies are worth studying. That's why we need to study FinTech. And as it turns out, those techniques came from or originated from the breakthroughs in the research methodology in behavioral finance. Those big data, computer science, and natural language processing, those techniques was originally used in behavioral finance. And over the past 20 years, right, the innovation in finance academia was behavioral finance, and then the innovation in finance industry was FinTech. They go hand in hand together. I finished this discussion by asking you this question. What is this? You see pigeons, right? But what's the difference between the pigeon that you see in the streets versus this one? This one got a bag, right? Like a soldier, right? So this one turns out to be a FinTech 200 to 300 years ago in Europe. Rothschild Family was the biggest bankers in Europe 200 years ago to 300 years ago, right? They had 5 brothers, right? Originated from Frankfurt, Germany. Some of you must be from Germany. Willkommen Sie, hallo, right? So they started from Frankfurt. The first brother was there. The third brother was a very ambitious one. Nathan Meyer Rothschild, he moved to London and became very, very successful in his business, clothing business. With that money, he wanted to move to banking. So he created a bank over there in London. And then another brother was stationed in Paris. Paris, vive le français. Some of you must be from France, right? Welcome, right? Another brother was in Vienna supporting Metternich and those monarchs in Europe. And then the last one was living in, working in Naples, Napoli, Italia. What is that? The Buonasera Italia, right? So these guys, they had to communicate. By the way, living in London versus Paris, right? There must have been big financial markets there. The same gold, 24K gold. At London, it was maybe expensive, and at the same time, the same material cheap in Paris. If you notice that information right away, then what would you do? Buy low, sell high. Buy the short sell in London and then buy in Paris, right? So that you wait until those prices converge to each other. You make money out of it. We call it arbitrage. Rothschild was doing that long ago. They needed a fintech, state-of-the-art ICE information technology, which was Pigeons and then their own postman system, their family's postman system. And the Pigeons had to carry those letters, but what if somebody intercepts and then take out the letter and then find out this secret information? Ooh! So they needed some encrypted language. There they used Hebrew language because they were Jewish. So encrypted language, state-of-the-art fast information communication system, that's fintech, right? None other than fintech. Nothing new under the sun. There's nothing new under the sun. It is banker's instinct using the state-of-the-art information technology in his or her generation, right? So nowadays we are the buzzword is fintech or techfin, but it's all the same thing, right? Banker's instinct, right? Reuters, well, Bloomberg, they are the financial information network, and then they are all the fintech or the information companies over there. So it is quite natural and to use this kind of state-of-the-art technology. And recently, those technology turned out to be very exponentially fast-growing, and then a significant part of that growth came from behavioral finance research methodology breakthrough. Okay, so that's why we need to study fintech from the perspective of the behavioral finance. Through that, you will be able to set up those neoclassical economic thoughts and psychological approach so that you will be able to build up the fintech ideas just like a Lego. Okay, so let's go to the next lecture, and then thanks for watching it. Bye bye.